You are listening to chartingwealth.com for Thursday, the 27th of September, 2018. Now, at the end of this broadcast, we're going to have some special trainings for you. Trend lines 2, along with the Heiken Ashi candlestick training, a surprise, and information about our book. But let's jump right into the markets. We see stocks are mixed. The S&P 500 down, the NASDAQ 100 up. We see that 20-year bonds are down. 20-year bonds are up. Gold is down. Now let's jump first and foremost, as we always do, into the S&P 500. On our weekly chart, what do we see going on? Well, so far this week we have a red spinning top. It's not a strong down movement, but it's cautionary. It's laying right there on the gold trend line for the weekly chart. We see the price percent oscillator is headed down. Derivative oscillators losing energy. Don't have a crossover yet, but again, we're continuing to see perhaps topping out. It sure looks like it when you look over the last 4 weeks. Now, this past week bumped up some. That is the prior week, but again, we're not seeing sustained movement above where the market hit back on the 31st, the week ending the 31st of August. So how are we going to do when we get into October? Remember, all market crashes have occurred in the past in October. Not saying that's going to happen here, but are we going to see some strong down moves? Don't know, but we will continue to watch. Let's go from the weekly to the 2-day. And of course, the 2-day, we continue to see the price percent oscillator moving over, going down, derivative oscillator moving down. And of course, we are looking at a candle that's being drawn on that 2-day chart of a red spinning top. Means indecision tending down. And again, price movement is above that weekly trend line still. We go from the 2-day to the 4-hour. What do we see there? Some up movement in the morning, then down movement in the afternoon. A lot of movement in the afternoon. Derivative oscillator gaining momentum. Price percent oscillator dropping off big time in the afternoon. So we'll continue to watch the S&P and see if by the end of the week we have a weekly vertical crossover going down. Sort of doubt that, but we'll continue to watch and see what we see. Now remember, we did have a weekly vertical crossover going down on QQQ. That's the NASDAQ 100 at the end of the prior week, the 21st of September. And what have we had happen so far? Well, we're showing a red, almost a doji, lots of indecision, tending down. Derivative oscillators continue to move away from the red signal line. Price percent oscillators gone negative this week. I'm sorry, I think I said that backwards. Price percent oscillator continuing to move down. Derivative oscillators gone negative this week. That's where we are on the Qs as far as the weekly goes. The 2-day, we see that so far the first day of this latest 2-day candle is up. We haven't had a jumping in point yet on our weekly vertical crossover going down. The 2-day chart's losing downward momentum. Price percent oscillator still heading down. We go to that all important for a jumping in point 4-hour chart. And what do we see? Well, it's been moving up since the morning of the 24th, Monday. Did not have a jumping in point then, and we're seeing up movement, although at the end of the day, price percent oscillator cranked over down a little bit. Derivative oscillator lost some energy. So if and when we see a crossover going down on that 4-hour chart, as long as the weekly and the 2-day are still confirmed down, that is your point to jump in and ride that down movement on an inverse practice trade. So we'll see if that happens. If and when it does, we'll be ready for it. Now we go from stocks to bonds. What do we see going on with bonds on that weekly chart? Going into our 4th week of down movement. We had that weekly vertical crossover going down for the week ending the 14th of September. And it's looking nice as things continue to move down. Bonds were up for the day on Wednesday, but again, still a down week as far as the weekly chart goes. Now, again, we always drill a little deeper. We don't just go with one chart. It's all the charts all the time. But the derivative oscillator so far for the week gaining energy. Price percent oscillator not heading down at the same strong angle that it had been in the prior week. We go to the 2-day chart. That's where we start to see some of the issues. So far, first day of this latest 2-day candle, we see a bit of a pulling off. Derivative oscillator stopped going down back on the 21st. And again, the latest full candle lost some energy. Price percent oscillator has gone flat. Derivative oscillator losing downward momentum. We have a green spinning top so far. This is just the first day of a 2-day candle. This is where we really see what we were warning you about yesterday, and that is that crossover that occurred in the it actually occurred in the afternoon on Tuesday. We saw more of it on Wednesday, blasting through our blue 2-day trend line. We saw that happen in the morning. More up movement in the afternoon as we saw the price percent oscillator jack up and derivative oscillator spike up. So again, we had some nice moves down. We told you to be ready to pull the plug depending on how things went that morning if you had not done it in the afternoon on Tuesday. Now, this does not mean that the down play is necessarily over. Just means we're going to wait because remember, we still have a strong down move underway on that weekly chart. So we can expect, all things being equal, the markets tend to move in the direction of the largest chart. It may roll back over on that 4-hour chart and give you another jumping in point. So let's just wait and see what we shall see. So that's where we are on TLT. Lastly, we'll go from bonds to gold. Gold down 0.53% for the day. And again, derivative oscillators already switched over to positive for the week. We're wondering if there's going to be a crossover going up, but with 0.5% or so down for the day. Might not happen by the end of the week. We're trying to really determine if gold is bottomed out or is just resting and getting ready to plummet more. Only time will tell. So we don't have a weekly vertical crossover yet. May happen over the next 2 days. What do we see going on as far as the 2-day chart goes? Well, pushing through the 2-day trend line. Derivative oscillator losing momentum. Price percent oscillator's gone flat. First day of this latest 2-day candle, a red down candle. That could change before it finishes drawing tomorrow. Thursday. We'll just say Thursday. We're recording this, of course, on Wednesday. Now, what do we see happening on the 4-hour chart? Well, blasting down, actually pushing down in the morning. A little further down movement in the afternoon. Derivative oscillator gaining momentum. Price percent oscillator really spiking down. So we'll continue to watch and see what we see. Now, remember, we've been sliding sideways for a while. We're about where gold had bottomed out all the way back to the 14th. If things keep moving down, then of course we might see an acceleration in down movements. We'll continue to hold our breath and wait. Main thing we're waiting for, of course, is on gold to see if it's going to cross over going up, and on the Qs, the NASDAQ 100, to see if it gives us the possibility of jumping into a down play. If you have not already listened to our training on inverse funds, how to make money when markets crash, catch that at the end of the program, along with Trend Lines 2 and our Heiken Ashi candlestick training. Plus, if you're new, we've got for you how to read a stock chart. God bless, my friends. We so appreciate you being with us. We love to hear from you. Feel free to write us, chartingwealth1@gmail.com. All the best from the whole team here at Charting Wealth World Headquarters.